All right, time for the next big trade where we uncover Wall Street's boldest calls. Sterne Agee and Leach says airlines are going up, and away. They could double within the next 18 to 24 months. Jeff Kauffman is the lead analyst on that call, and he joins us now to defend it. Welcome to Street Smart, Jeff. That is an incredibly bold call, and I guess a lot of visibility to have, right? 18 months out. What's this based on?
Well, I think really two or three factors, all right? Point one, these stocks are all trading between 3 and 4 times earnings, and they should be trading at about 7 times earnings. So they're trading at extreme discounts to their normal range. Point two, fuel is the single largest expense in this industry, and in the last 2 months, the price of fuel's gone down almost 40 cents a gallon. Now, many of these airlines won't see the benefit in 2Q because they hedge, but 3Q, 4Q next year, a lot of these companies are busy putting in those hedges today, and 1 penny to our fuel forecast could be anywhere between 2 and 6 cents a share in earnings. So let's take a company where maybe a 30-cent difference between my estimate in fuel and what it's actually going to be if they hedge right now. You could be talking about $1 to $1.50 in incremental earnings. At 7 times earnings, that's $10 to the stock price right there. I think the most important part of this, though, is that the single best driver of airline profits is business profits, and business profits continue to be strong. The planes are flying 85% full. The managements have all changed through these mergers and consolidations. They're focused on ROE, and nobody's adding capacity right now. So despite the fact that it's a slow economy, load factors are rising, yields are rising, and profits are rising. And it's all going unnoticed because everyone threw these out of the portfolio during the de-risking of the last 2 months.
Yeah, well, could it be the case where there's kind of a perverse logic here? When the economy is picking up, airlines are not a good place to invest in. When it's slowing down, maybe they are. You know, I don't recall hearing about airlines doing anything else besides going bankrupt and being forced into mergers. I've never gotten the idea of why you would invest in airlines, unless it's a fuel thing, but I just don't see how you could have that much visibility going out with oil prices.
Well, I'll tell you a funny story. 15 years ago, I couldn't give away a railroad stock. And people gave me the same arguments for railroads as airlines. They're hell-bent on mergers. These guys destroy capital. You know, they overspend. They're poorly managed. Well, you consolidated after about 20 years post-deregulation. They stopped adding capacity. They started raising prices to customers. And today, I would argue railroad stocks are the blue chips of the industrial space. It took about 10 years longer. But with $80 oil pushing a lot of companies out of business and all the consolidation we've seen, we're actually seeing very prudent management in this industry, I think for the first time that I've seen in the last 25 years that I've been following the industry. So, you know, you hate to say this time it's different because those are already expensive words.
Yeah.
But this time it's different, and they are managing differently. And I think, like the railroads that took 20 years to get to a consolidation point, I think the airlines are finally getting there. The fuel's really only a short-term thing.
Yeah. I was going to ask.
That's only happened in the last 2 months.
Is this really more of a play on the management? I mean, you've met with the people who are now managing these companies. You know what they want to do, and you're impressed by that for the first time in 25 years of airline managers, airline executives here, because it sounds like it's more about the people who are running it and what they want to do than just the oil prices.
Well, and that is what's different. And let me go back to your earlier comment. When the economy goes up, airline stocks do lousy. Well, that's because historically people bring aircraft out of the desert and start flying them competitively. But what's different this time is $80 oil. Because at $80 oil, none of the planes in the desert can be brought back and flown profitably. And if you look at the current fleets that are out there, Delta still has another 125, 150 aircraft that are not fuel efficient that it needs to get rid of. The same with United, the same with American.
I want to bring Sandy Villere in here. His company, his family's been investing in their fund for over 100 years. I'm going to guess you've looked at the occasional airline stock, transportation stock here. What do you think?
And they're tough to own. I mean, Warren Buffett would tell you, how do you make a small fortune? You invest a large fortune in airlines. And so for somebody that's not short-term oriented, is this I can hold these things for 3 years. I mean, I respect the fact they're trading at 3 times earnings. We actually bought some Kansas City Southern back when it was trading at equally cheap multiples, and it worked out really, really well from that March of 2000 when people shifted from tech to value. But can I really own these airlines?
I'll tell you what I think is going to be the big surprise within 2 to 3 years. You're going to see 2 or 3 investment-grade airlines. All right, you look at Delta, they're throwing off almost $3 a share in free cash this year and last year. United's doing something similar, and they're paying down debt with it, and they're all bringing the debt down to manageable levels. You and I are all paying almost twice as much as we did 10 years ago for an airline ticket, and all the planes are full. And that's what's different. These
Well,
are
that
becoming
pricing power is key.
investable businesses.
I don't know. You could also
It's
look
very
at
important.
airlines as a good hedge on oil, could you not? I mean, that might be one way to think about it.
Yeah, it seems like maybe you'd have a FedEx or something like that might be a... Anyway, I'm just curious how that would...
Well, it used to be, but ironically, Delta just bought an oil refinery. $150 million. So everyone that used to trade it as an oil play, that might not be the case this fall. But here's a point I'm making. I would agree with you. For 8 years on the buy side, I traded airlines. They were always my single best profit center because all I ever did was trade seasonality. I never believed they were stocks to be owned. What's different this time is the stocks are at 3 times earnings, and they're making money, and they're going to be making more money because nobody's adding capacity and fuel prices are falling. So if I have a dollar to invest, there's just less risk here right now is what we're saying.
Tell us your favorites.
Well, really there's 3 favorites we have. I think if you're going to own airlines, and I hate to be proverbial here, but own the pigs with lipstick. All right, owns the ones that have the most leverage to if we're right on this. So Delta Airlines, which is taking business market share from American Airlines right now. The airline's actually making innovative investments, whether it's the oil refinery, whether it's investing in its partnerships, and they're taking market share and they're growing. They're going to get down to $10 billion in net debt within 2 years, and I think investors are going to start to rethink how to value Delta when they get there. United Airlines is about a year behind Delta integrating their merger, so they're still going through some bumps and bruises of integrating SAP platforms. But by the fall of this year, I think they're going to be headed in the right direction. And then the last one is U.S. Airways, which is a $12 stock that on its own fundamentals we think can get to 18 to 20. But we also think there's a pretty high probability that they could get involved in taking over American Airlines. Now, there's still some uncertainty there, but the early work we do on that, with a combination with American Airlines reducing its costs through bankruptcy, can get to $30 a share on a consolidated entity. So I actually think some exciting stocks in the group, and the timing's just right given the sell-off that occurred, lower oil prices, and where the multiples are.
Got to be not a very conservative trade, though, right? I'm assuming you recommend only sophisticated investor who discuss this with their financial advisor should go in on this one.
Well, actually, in any portfolio, I think there's safe investments, but if you really want to outperform and grow, I think you need a little sizzle. And, you know, if you're a conservative investor, we'd say there's nothing wrong with owning an airline stock or an airline convertible in the portfolio, but don't make it 100% of your holdings.
Of course. All right, Jeff Kauffman with your This Time It's Different trade. Thanks very much from Sterne Agee and Leach there.